We welcome you to another edition of Being Well Informed. My name is Claudia Barber, and I am your host of this weekly podcast and television program. We are excited about our guest, Megan Tobias Neely, who has written a book called Hedged Out. Welcome, Megan.
Thank you, Claudia. Thanks so much for having me.
This is an opportunity for us to visit and dive into the world of hedge funds. What is a hedge fund?
That's a great question. And most people do not know what hedge funds are, even though they constantly make headlines. But all you need to know, especially for understanding the purpose of this research, is that they're small private financial firms that pool large sums of money from wealthy people and institutional investors. So people, groups like university endowments, pension funds, to invest in the stock market. And the key piece about them that you need to know is that they tend to be very small, manage a lot of money, and they receive less regulatory oversight than other financial firms because their investors are perceived as being really sophisticated because they're institutions. And so they're deemed to be at lower risk.
Lower risk, but you say less regulation?
Well, they are regulated once they're at a certain size, but there's less oversight than large financial institutions. And the thought is that and this is because they require you do have to have a certain amount of money to invest in them. And so it's thought that like the people who are well off enough to invest in them or institutions are knowledgeable enough with what they do with their money that they're less at risk. But this kind of loses the fact that sometimes the investments of groups like hedge funds pose societal risks. So, for example, they're attributed with some of the conditions that made the financial crisis of 2008 more volatile. They also took actions like did investments that made the stock market drop when the pandemic hit in 2020. So even though perhaps their investments, their particular investors who give money to them, are less in need of protection, they have consequences for society as a whole that's really important to pay attention to.
So tell us about yourself and how you kind of evolved into the hedge fund world.
Yeah, that's a great question. So when I was an undergraduate and starting off in the world looking for jobs, I applied to all kinds of research support jobs. Knew I wanted to go into academia. And I ended up doing a research job in a large financial firm as an analyst in their hedge fund division. And I had no idea what it was. I didn't know what a hedge fund was. In my job interview, they asked me and I said, I didn't want to lie. So I said, no, I don't know what hedge funds do. And they said, that's fine. We'll train you. We just want critical thinkers who are trained, in broadly in other fields, and we'll train you how to work in it. And I did just like a research support job, a lot of like background information into the hedge funds they were invested in. But that coincided with the 2008 financial crisis. And so it really opened my eye to a world that affects us all, but we know very little about as part of the general public. And when I went back to do my PhD in sociology, I decided to study the industry because I thought I learned so much about how it was, connected to the crisis and what happened. Their investments were tied to the home mortgages that people foreclosed on. And so I wanted to better understand the relationship between the work they did and inequality in society more broadly. And so then I went back and did my PhD and focused on the industry for my dissertation. That turned into
I remember back in the 2008, 2009 era, there were protests at hedge fund people's homes out in is it Long Island or Staten Island? Mm-hmm. And that was a news event that was there for the moment. And then, of course, it went away. But why were those protests happening?
Yeah, I think that and this is part of what led me to study them, is they have become really emblematic of the sort of 1% that Occupy Wall Street called attention to, that these top earners that have over the past like 30, 40 years have driven rising inequality. And this is something that Thomas Piketty's research, a French economist, really brought attention to the general public, that the U.S. has levels of inequality that haven't happened since before the Great Depression, that they had returned to. And it was, hedge funds, I think, really became to symbolize realize that those kind of financial elites that make so much money, I mean, their incomes are above and beyond what is explainable from an economics perspective. There's no theory of supply and demand can
So
explain that.
this is far different from people who, let's say, invest in the stock market every day and they do options, or they write covered calls, or they do puts and calls in the option trading. Very different.
Well, some of them might engage in options trading, but it just depends on the type of hedge fund and the kind of strategy they run, and how they manage the money. So hedge funds capture a wide variety of different strategies, investment types. So that's it. More of captures the designation captures the type of entity and how it's the kind of investments it receives. But there are a number of different ways they do those actually day-to-day investments.
Now, you have written a book called Hedged Out: Inequality and Insecurity on Wall Street. That is very interesting, and it's turning heads, and it's a trending book. Tell us about why you wrote that book, because you said earlier you're a sociologist by profession.
Yes, thank you for asking and mentioning the book. And the book is based on research I conducted. So I share a little bit of my experiences just to help the reader understand how I came to this topic. But the book is really about my qualitative research on the hedge fund industry. So and this was, like I said, inspired by that firsthand experience of the 2008 financial crisis for working in the industry, and also from the uproar about it, the Occupy Wall Street movement. And at the time I started this research, I knew I wanted to study the industry and understand how it was tied to inequality. And I came across this industry study that really piqued my interest. So it was done by a professional association, and they surveyed hedge funds and found that 97% of assets in the hedge fund industry are managed by firms exclusively run by white men. So let me repeat that: 97%. And this industry manages trillions in assets. And this means everyone at the leadership level was a white man. Another study found that there were more hedge fund managers with the name David than there were women. And so it was very clear that this industry has very striking disparities in terms of who controls it, so much money, and access to power and status in the industry. And so that kind of puzzle of how do you get an industry that is so glaringly one-sided in terms of who controls it, that have so much power in society and no one questions it. And so as a qualitative researcher, we ask questions about how this comes to be. So I knew that statistic at the onset, and I wanted to understand their everyday practices. So I interviewed people who work in the industry. I went to all kinds of industry events, so a lot of networking events, professional association conferences, to understand how the industry is kind of run, what the social fabric of it is as a labor market. So how people get access to opportunities, how they advance into the industry. And what I found in the book is that there's these really close, tight-knit networks that are tied to that lack of oversight that I talked about earlier. So basically, it's a space where these white men from predominantly elite backgrounds are generally surrounded by people like themselves. And I explore the kind of, the number of factors that lead to that, but then it allows them, it creates an environment in which they can very much call the shots. And they don't think of it that way. They just think, oh, I'm hiring somebody like me, or I'm extending opportunity to a good guy. This is often how it's framed. But behind those sort of pro-social, positive or well-intentioned approaches to hiring and promoting people, it then leads to this striking and severe inequality in the industry that then shapes inequality in the rest of in the workforce and affects us all.
Now, you said it shapes into inequality and insecurity, or in the workforce.
Yeah.
It sounds more like they, again, are hiring people that looks like them, that they feel comfortable with.
Mm-hmm. Absolutely. And the piece about insecurity stems from the fact that the way they describe this is that, they describe the stock market as very tumultuous. They say the regulatory environment's constantly changing. So they say that they need these small firms that are kind of adaptive to that uncertain environment. And that kind of piqued my interest as a social scientist. Like, what is going on in response to these perceptions of insecurity? And it's a relative type of insecurity. It's not like having food insecurity or income insecurity, but rather the perception that the stock market is volatile. And they do have a lot of turnover in their firms. They shut
They
down.
do.
Yeah, and there's a lot of research on how when people perceive insecurity in their environment, it places this premium on trust. And anytime trust happens, people are more likely to trust people like them because we perceive people and how we perceive them is shaped by these kind of gut level instincts and responses. And we know that is very much shaped by race, it's shaped by gender and class. And sometimes we don't realize it's happening. It can be hard to pinpoint, although when you see the outcomes in terms of how disparate an industry like this is, it's pretty clear, that beliefs about that are shaped by racism and sexism and classism are affecting this. But yeah, it's often in coded terms like somebody like, I just felt a connection with that person, or I just trusted them. It was, how do you explain that? Sometimes they would tell me it's organic. You can't explain it from a quantitative perspective. You just kind of feel it when you form a relationship with someone or hire them. And so what I really wanted to do was piece out how then that allows them to, create firms entirely run by these so-called kind of yes men that wall them off from any kinds of checks and balances to those practices.
Do you take an ethnographic approach? I've seen that word used a lot in describing your book, to Wall Street in this book, and how so?
Yeah, so with ethnographic research, the goal is that you want to become embedded into the like everyday lives of the people you study. And so ideally, when studying an industry like hedge funds, you would want to do an organizational ethnography and sit on the desk with them every day and see how they go about their work. Because it's such a closed off and secret, kind of highly protective and secretive industry in many ways, I was not able to get access to do that kind of ethnographic research. I would have loved to, but what it did is, but it helped that I had that previous work experience, so I understood sort of what the everyday life was like working in the hedge fund industry. I knew what the routines are like, some of those considerations. But what I ended up doing, I could get access to these sites where the labor market happens. And so that's why I went to those networking events, professional conferences, to observe them as they socialize, interact, make deals. So this is a site where they often find investors. They often find people they want to hire. And you can see these processes at work. And I would notice, for example, if you look around the room, how networks are very segregated in terms of how people are forming small circles. There were also things that came up that didn't come up into my interview. Like I noticed that sexual harassment or kind of sexualized comments were really routine. And it happened, over the course of my research and the observations and how I interacted with people. And that led me to ask women more questions about it, and kind of change the way I was asking questions. And it became very clear that sexual harassment is very rampant in spaces like this. It's true also in tech and other fields where people call themselves, one thing that repeatedly came up in my research is insiders would say that their firms were like a family. And anytime people say something like that, it kind of clues you in that there might be something happening that, they say it in a positive way, right? It's a sign like, oh, I like my colleagues. I feel really comfortable with them. But often it also is indicative that there are boundaries being pushed at work, whether it
Mm.
is in terms of, only hiring or including people who you perceive as like your family members, or whether it can also then fall into areas around sexual harassment. For example, one firm in their hiring materials, they feature couples who met at the company
Oh,
as
okay.
like you should work here, you'll find your life partner, and that's a warning flag to me that it's a workplace setting where there aren't enough protections to keep that kind of behavior from falling under sexual harassment.
When you showcase a hedge fund manager, how would you do that?
When you say showcase, like in describing the work, or
Describing the word and
oh, yeah.
sharing with us what a hedge fund manager really does and looks like.
Yeah, so a hedge fund manager is usually the top kind of executive at the company. So it's usually the person who founded the company, the hedge fund, and it's somebody whose idea of how to invest is what drives the entire company. So often they would describe how they have what are called like investment theses that are like how they understand how markets work and human behavior in those markets work, and that they invest accordingly. And I share this because it captures how these organizations are really very much run around that singular person. And that is very indicative of an imbalance of power at the organization. So this person might have this idea, this kind of great idea for a way to invest. They start a firm, they hire a bunch of people. Especially when these firms are smaller, there's often not a lot of kind of checks and balances to their authority because they're really powerful within the organization. And that's where some of these issues then are often come up, is because of that very steep kind of hierarchical structure around that key person. And this, it comes up even in the contracts organizing their activity. So in their contracts written for client investors, they will explain who the key personnel is, who the hedge fund manager is, what their role is. And they'll sometimes even include what's called a key man clause. And that's what it's technically called in the document. And it gives investors, it states the investors' rights to redeem their money if that hedge fund manager, who's considered the key man, leaves the firm, or if something happens to him. Like it often says, like if he becomes incapacitated. So it really captures how even in the legal, structure guiding these organizations, this key man, this hedge fund manager, is considered the top person within the organization and has considerable power and influence within it.
Well, they do have key man life insurance policies that
Mm.
exist, and I guess they coined that name based on the fact that the head of the organization drives it, and if that person leaves and is replaced, it could very well change the structure of the organization entirely.
Yeah, absolutely. And I mean, there are, like you said, very real ramifications of that. And as a sociologist, I look at it as how is that kind of legal structure indicative of the social hierarchy at play? So it is, from an investor standpoint, it's something you have to be very aware of. And then from an organizational perspective, it's evidence of a higher, kind of an organization built around one person or a couple key people that shapes, how decision making happens, how relationships form in the organization, and all that.
Why is there extreme wealth in hedge funds?
Yeah, that's a great question. So, and that stems from a number of factors. So, one piece of it has to do with that they have high net wealth investors. So, whether they're wealthy people, like wealthy families, or large institutions who can just invest a lot of money. Now, what my research finds is that, because I often ask people who've started hedge funds, where did you go about getting that money? It takes a lot of money to start up a hedge fund. So, to get going as a hedge fund, one industry report cited that you need about $85 million in your first year alone to be able to run that hedge fund. Just,
Wow.
yeah, so the scale is enormous. And so, when I would interview people, I'd often ask, where do you start off getting money? And they would describe, and they would often kind of cast themselves as relative outsiders or non-elites, or say, oh, I just, but I worked networks, but I don't really, know that many people here. So I kind of, bootstrapped or pulled together what I could. And then when I dig a little deeper, it would often become clear they did have access to very wealthy networks, either from their professional work, perhaps at an investment bank beforehand, or from more often, it actually came from their personal networks. So their networks from their upbringings, whether it's their families or their like family communities. And this came up again and again, where people would describe how they had this initial friends and family money that they fundraised from. And one of the key things they said with this, friends and family round of money to get a hedge fund going, is that part of it, why it was so key, is that it showed subsequent investors that what you had at stake in the game. So it made it, it makes later people more eager to invest because it's a sign that you're really committed. Now, the other key part of where hedge fund wealth comes from is that, especially early on in the industry, as it was growing in the 90s and early 2000s, there was the perception that it was really hard to get into investing in hedge funds. Often the really good ones would only, were selective of what investors they took on. And so people said that it had this very elite allure. And it was a way to signal, if you were invested as an individual in hedge funds, it was a signal that you had so much money.
Mhm.
So it was a way that you could even kind of in your social circle, you could communicate that you're really wealthy by just saying, oh yeah, so I'm invested in hedge funds, and it was like a code for being at this kind of next level of wealth. So that sort of captures how it had this elite status and allure within wealthy circles, and especially in the Northeast and around Wall Street.
How can we, I guess, better understand how there are winners, there are losers, and there's inequality in Wall Street, and how that could possibly change by reform?
Yeah, those are great questions. So I think one of the things that I talk about in the book, and the kind of central what the title of the book is evocative of, is the fact that there's these processes like we talked about before that are about picking people who you see as being like yourself, who's a good fit, quote unquote, and hedging them in to these kind of inner circles, in their elite circles with so much wealth. But at the same time, those same processes always have a flip side. So if you deem somebody as being like a good fit, there's always someone else who you are deeming as a bad fit, and you're hedging them out. And so what I look at is how that happens according to gender and race, and often elite status. And sometimes it's things like people's for the fraternity that they were in university, or the university they went to. So often for example, in hiring, and even later in investment decisions, people go back to looking at what elite pedigree people had, or what fraternity they were in. And we know there's a lot of research on how university fraternities are often racialized. You can see how they're segregated. So those are the kind of pieces that on the onset put people into, make it easier for these, white young men from elite backgrounds to get kind of on the fast track to succeed in the industry, by making it harder for other people. And I interviewed one man who I think is a great case that kind of show this, who he's an elite man who's Black, and he talks about how he's constantly penalized. So he's been trained at elite, he has this elite pedigree, he did kind of all the things that his white peers have done in the industry, which would ensure success in many settings. But he described to me how many times he encountered pushback what he attributed it to was this perceived kind of incongruence of him being Black and from an elite background. So, he would act on the trading floors. So trading floors on Wall Street are known as these sites where you're really kind of aggressive and emotional. There's these big outbursts, and it's actually part of the bonding rituals of the trading floor. People curse and, sometimes they'll punch screens or stand up, do these things. And he said when he did that, because he's Black, he was perceived as threatening, and he was reported for that. And it actually pushed him out of several firms. And he has the same background, the same elite upbringing, and that was the factor that made it different for him. And so I think that really captures how, once you're even if you have some of those elite kind of status to get you in the door, you're treated differently depending on who you are. And
That's very enlightening, but that is so analogous to real life. How people are excluded. If they're in a group, they are overly critical about how they might get emotional, and then they're squeezed out because they don't like the way they express themselves, and they handle themselves in a particular way. And it's over scrutinized. So that often happens in the regular workforce. But it seems like this more so is in the hedge fund market, if there is just this situation where a limited number of people can be a part of this.
Yeah, absolutely. And that was something I noticed again and again, is that the same kind of processes happened as discriminatory processes and bias processes that we see in other workplaces. But what happens in this setting is it gives them access, it shapes this access to so much money and status and power in our society. And so I wanted to kind of understand that a little bit better. And I think one of the key things that's really important to think about with that is that because going back to the fact that these firms are so small, they're dominated by that one key man, the hedge fund manager, and it creates an environment where he can call the shots. And so while a lot of what I heard was very, similar to other workplaces, I also heard that there were, I would say, more cases of really overt racism and sexism than you hear in other settings. And it's because they were just perceived, they thought they knew, or they kind of knew that they could get away with it. And part of it had to do with the fact that reputation in the industry is so big. So when these things happen, people didn't feel like they could speak up. For example, I heard several people I interviewed knew of hedge fund managers who had outright said they wouldn't hire women. And
Okay.
there was no consequences for that, because you didn't want to see it, be seen as criticizing them or speaking up. And they just said, what some of them would justify it as they thought they'd be less dedicated to the work. They had a number of reasons. Sometimes people didn't know exactly what their justification was, and they didn't need to say it. And that kind of
Right.
shows what
So,
they can get away with. Yeah.
what you're describing also happened in the law firm industry quite frequently. You have people like Sandra Day O'Connor, Supreme Court Justice Sandra
Mhm.
Day O'Connor. You have Federal District Court Judge Gladys Keller, who will share with you when they graduated. I know Judge Keller graduated from Harvard Law School. I know that Supreme Court Justice Sandra Day O'Connor graduated from Stanford, and they could not find a job in a law firm. Now, when you get to their story, they have shared it many times over that law firms would not hire them. And especially major law firms. And some of the reasons, in fact, I remember appearing in a program with Judge Keller, who acknowledged that the partner said, "I can't get the partners to agree to hire a woman." One person would admit that, and it was, they're of childbearing age. And so another person would admit that.
Yeah.
But the fact that this happened, and we're talking about the 60s and 70s, when there was no woman on the Supreme Court in the early 60s. So things have changed since then, but this is still happening. You're thinking in the hedge fund arena?
Yeah, and I think it happens in other settings, but people use more coded
More
wording.
coded
Like,
word.
yeah.
Okay.
I think that people sometimes are really kind of more careful about how they frame it, but the fact that it was so overt in hedge funds, I found to be indicative kind of power and, ease and a sense of entitlement they have, that they felt comfortable saying that openly. And I think over time there's been I get the sense that people are being a little more careful in the industry, but you still have these cases of top hedge fund managers who can call the shots and don't, there's no ramifications for them. And I came across this again and again. One example was a woman who I interviewed, she was on the investment team, and she described how she was the only woman on an 80-person investment team. And she was hired to replace a woman who got married. And so she was transferred into client services. And just because the woman got married, it was assumed that she would have kids and that client services would be a better job for her. And in my interviews, I never found any evidence that client services is actually an easier job to have children in. That didn't hold up at all, but this belief just persisted. But then the woman I interviewed who was on the investment team who replaced that woman, she also cited how when she was hired, so she had a specialized degree in geology and related fields that would make her, she wanted to specialize in oil and gas investments. And she described how they put her on retail because they perceived her as a woman as being more interested in shopping and retail investments. And so it's a good example. It's another example of how it's not only, some of it is these stigmas around motherhood, but it's also these kind of gendered assumptions about what people are interested in or what their specialty is. And I found the
Or
same
their
thing.
assumption as to
Yeah,
what they
there are some.
believe they are interested in. And
Yeah,
that's why you often have in many situations, industries like the hotel industry often have women doing housekeeping tasks. And
yeah,
then the managers are doing other janitorial tasks. But very rarely do you see a male housekeeper changing beds and things of that nature. So
yeah.
these are perceptions that are persistent in many industries. But
Mhm.
you're sharing this as part of the hedge funds. So how was your book received? I mean, in terms of the Wall Street industry?
Yeah, I think so far, mostly I've heard from people who it really resonated with their own experiences. So I had
Okay.
people at hedge funds reach out and say, "Yes, this matches with what I've experienced." You know, I think for them, it's actually the least surprising, especially people who experience the marginalization. You know, they know they see it every day. They know what
They see it
happens. So
every day.
yeah, so I think
Very
for them,
interesting.
you know, it I think they said it felt validating, but also, you know, it was what it was expected. You know, I've just heard a few people push back and who get kind of hung up on some of it, but generally they fall into that group that benefits from these systems. And so I think that you know that kind of response is to be expected. So that's yeah, that pushback wasn't surprising. I think when people have these kind of privileges called into attention, the response is often really protective. So that, yeah.
Well, where is your book available?
Oh,
Hedged
thank you for
Out:
asking.
Inequality and Insecurity on Wall Street.
It's available on all kinds of independent booksellers. On my website, megantobiasneely.com, I have links to independent booksellers that sell it. It's also available on Amazon and the University of California Press's website. And I actually have a coupon code on my website still that people can use. So please make use of that. And I'm excited to have people engage the book. And I wanted to reiterate too, that I think it relates to so many different walks of life. You know, I was really using hedge funds as really a case study for understanding kind of financial elites and those who are powerful in society. And I think that some of the insights, you know, apply, like you said, to other related fields like law, to the upper echelons of government, technology. So I think it will speak to more audiences than those just on Wall Street.
Thank you so much for coming aboard and sharing with us about your book, and appearing on another edition of Being Well Informed. Thank you.
Thank you so much for having me.